Seems like inflation is now going up. All right, for all the guys out there who are hoping for inflation to go down, well, it's rebounding. Not really that big of a surprise considering that Europe recently rebounded as well. And generally speaking, in U.S. history, when inflation numbers go down to 3%, there's always a slight rebound. So consumer prices rose 0.3% in December, higher than expected, pushing the annual rate to 3.4%. Now, Wall Street for the CPI only expected like 3.2-ish. And last month it was at 3.1. But now we're at 3.4, which is very high. And one of the scariest parts is we're also getting many items in your Walmart, your Kroger are getting more expensive. So you know that bag of Lay's that you were complaining about that's kind of expensive? Well, it's going to get even more expensive now. So if you look at what's going on here, Fed Bowman says she remains willing to hike if inflation progress stalls, and even says that she's not really in the favor of an interest rate cut. Now, this should have been like a massive like news piece a few days ago, because this is going to cause a lot of chaos on the market. Everyone right now is betting on, okay, no more Fed rate hikes, and everyone's betting on inflation going down with a soft landing. But now it seems like we could be seeing an even worse real estate market, because now the Feds are like, hold on a second. If the interest rates are this high and inflation's going back up, we either have to hold rates for the rest of the year at this high point or hike it up a couple more times. Now, both of these choices are pretty bad. Hiking it up will probably cause a real estate Armageddon and all these properties to go bankrupt and worthless. And the second option is to hold the rates, which is probably the best move. If you hold the rates, a lot of companies and a lot of these real estate properties will also go bankrupt, which is not in the extent of hiking it up. So if you look at what's going on here, housing market prices only seen a handful of times is coming in 2024, says Morgan Stanley. Home prices could drop 3% next year amid decline in borrowing prices. Now, one thing I want to ask about you is don't be fooled about the 3%, because certain cities will actually drop more than others. Like if you look at Chicago, prices are dropping so much. Look at this, 1,500 square feet, $775,000, and nobody wants it. Not a single person. If you want to be a good real estate investor, invest in the smaller cities, guys. These big cities that make up a large chunk of our real estate percentage is pretty terrible. Chicago real estate, Seattle real estate, San Francisco real estate, they're all doo-doo. They're all bad. Junk homes and junk properties everywhere. These are not the homes that you want to buy. What you want to buy is, for example, in Cincinnati, like the suburban areas like Blue Ash, these high-end suburban neighborhoods where you can actually get these suburban houses. These are going to be the units where prices don't fall. These are going to be the units where it's worth investing. But like the Manhattan condos, Seattle condos, and San Francisco condos are just not it anymore. And if you're going to be buying commercial real estate in one of these big cities, bro, just kiss your money goodbye at that point. Because many of these properties are selling literally for pennies on the dollar. When I tell you a massive building, 12 stores in Chicago's Loop area sells for $4 million, I'm being serious. It's getting pretty bad. Some of these mortgage investors are now filing for bankruptcy. JER is one of the latest property firms to crash. It's a big deal. I'm surprised it didn't make on the news lines more. And then Muddy Waters, the most infamous short seller, is shorting Blackstone Mortgage Trust. Inflation is going up. Okay, interest rates will probably stay or even go up. And no more rate cuts. I'm serious. The Feds aren't stupid. They don't want interest rates to be high any longer than you. But when rates are high and businesses are taking it down, and also now inflation is going up, the Feds have a really troubling problem in their hands. At one point, they don't really want to crash the economy, but they know that if they don't crash the economy, inflation's going to go back up. This is one of the scariest numbers, and this pretty much just made a Fed emergency meeting. For all the people out there who don't think the Feds do anything, you're wrong. The Feds are probably going to be hiking their rates like crazy again. 1, 2, 3 more hikes will probably bring inflation down. They want unemployment to go up. They want companies to go down. And they want these foreclosures to be happening more. They also want these mortgage trusts to implode so they could get inflation down for once. They need to get down to 2.0, which is a very, very difficult thing to do. Especially with inflation, the lower you push it, the higher the chance of it rebounding, like this time. Thanks for watching, guys, and see you later. Check out the private Discord server 7-day free trial with some really amazing trades for some of our star traders.